Swayam Prabha. Digital India. Educated India.
Almost all of money market instruments, and I try to give you an idea of money market. I started out with a classification of financial market sectors. In the financial system, you have both capital market and money market. So I started out with both the things. This is the one you have seen. Now, I have two kinds of averages here. Call market is a daily rate, like stock market price. It fluctuates from morning till afternoon, till the call market closes, just like stock market. So you can have a hour to hour price data, you can have a daily data, end of the day data, then you have a end of the month, alright, and every day there can be a low, the lowest price, the lowest call rate, and the highest, like the maximum and the minimum value, because it fluctuates. So therefore there can be a minimum value that day, there can be a maximum value that day, just like stock market. And this data, now the question is how to construct an average without getting into too much of a complication. And I found there's not much of a change. What I did was, one was a month-end high, alright, and then a month-end average of high and the low I've taken. Now you can see a very interesting thing. The average is slightly lower because when you average them, you're not at the highest level every month. Alright? Because you're taking an average of the lowest value on a particular day and the highest value. Or at the end of the month, the lowest value, what it was, the last day, working day, and the highest value. So what you find here is there has been a dip, not much of a change, and after that things have been going upwards. There has been a dip. 2007-8 it was some number, 2008-9 a marginal increase, call rate has gone up marginally. 2008-9 is that famous year, recession set in August. Alright, then the first year of recession, full year of recession, you saw a very interesting thing in the call market in India. What did you see there? A significant dip in the average value. Alright, what does it mean? Call market call rate, there is a significant dip. After that, RBI became very active with monetary policy. And that monetary policy I told you was a high interest rate policy, low liquidity policy in the market, alright? So the rates have been going up. But the dip clearly says that when the recession became active in the Western world and it started influencing Indian economy and the Indian output growth rate etc. were going into a recession. Recession means growth rate of output falling. When they were going down, there was a lot of liquidity in the Indian money market. Banks were not required to borrow in relative terms a lot of liquidity from other banks or from private, like the Discount and Finance House of India, DFHI. They were not required to borrow a lot of money. So what you see is that a simple supply-demand diagram would say when the supply is more than demand, when you have excess supply, the price is. So when there is excess liquidity and the demand is less for the liquidity, because banks already are sitting with a lot of cash, so they have no problem or less problem to show their CRR and all that to RBI. They were not borrowing much in relative terms. But it's very interesting, the call rate has been, recession didn't go away. We are still in the middle of a recession, still. Alright, our growth rate has not picked up. The projection coming for the current financial year 2012-13, the average growth rate will be even less than last year probably. We are not out of it. But because of tight monetary policy of the RBI, liquidity or excess cash in the system was taken out. And because of which the call rate was again showing up. Simple thing, say CRR value. If RBI raises the CRR value, banks are required to keep more cash. And that cash is like thousands of crores of rupees. It's just not a little bit of cash. And that impacts the market, the short-term money market. And therefore banks are again borrowing. Because you can see after 2009-10, the dip, it has been steadily going up. 2010-11, 2011-12, it's not a very sharp increase. It's an average value, remember? Average value cannot sharply increase. But it's definitely going up. Alright, the banks are borrowing. But 2009-10, the first year, 2008-9 in the middle, recession came in the Western country. It took 6 months, 8 months to affect India. Alright, significantly. And then you found that the market was already having a lot of cash, the money market. Banks were having a lot of cash, surplus cash. So no problem in showing CRR to RBI, keeping that cash there, which is a prime factor in determining call. Or if there is a recession, people must be spending less, quite possible in fear of future recession. I don't know why, but because of multiple reasons, the call rate was down. Okay, so there is a point to note here. That's why I'm showing you the data. I have how many? Only 5 years data. Earlier I used to show 10-15 years data. No point. Going back 10-15 years, what's the point now? We need to show the data from pre-recession to current, because that's an important time period in your economic life. All over the world, just not India, all over the world, we're doing it. Next. This is a call rate month-end high. Monthly. Why do I have that? I told you in my lectures that there is a seasonal factor in call rate. There are certain seasons when the call rates are always high. Certain seasons when call rates are down. Like end of the financial year, call rates are usually high. Alright? Then the half-yearly income tax payment time, the call rates go up. Because companies borrow a lot of money, withdraw from the account to pay the taxes. At the festive seasons, then the agricultural harvest season or the sowing season sometimes, there's a lot of cash transactions. People say, but I doubt that very much. So that affects the call market, because the call market is so much urban in some sense, and so much of less of a rural, that whether it affects. But there are factors hypothetically proposed. You can hypothesize something, you can propose something, but then statistically they have to be determined whether they are important or not. I can think about X, Y, Z, but it may so happen that only Y is important, X and Z are not. So whatever be the reason, seasonal rate you see, all these years except the red line is showing a very sharp turn. And that is not a seasonal factor because of which it went down. You look here, very interesting thing. The recession in the real sector didn't hit Indian economy for a long time. It was affecting the Western world. But the money markets are more connected. Financial markets worldwide are more connected. Look at the very significant factor here. That in 2008, if you go month-wise now, 2007-8, month-wise, it's very interesting. 2008-9, month-wise if you go. The year when recession set in. When was the month when it shot up? You see the numbers? It corresponds to roughly after August, end of July. In August, September, October, and then in November it is down. 3 months. It steadily went up, came down. Very interesting. Now, suppose you have no information, no TV, no internet, nothing, no newspaper, no magazine over the Western world. You watch here with the call market. Suddenly you see on your screen, some months it's going up. This is what it is saying. And you start wondering, why is it going up? Now you can see something here. The recession, people say it's around August in the Western countries. Now, why is it that when the recessions hit, it's very significant? I really don't know, but the call market definitely responded. Because these 3 months, no other year, there's a seasonal fluctuation in those months so much. Look at the other years, there are uneven lines, but they are quite steady. Look at the blue line, quite steady. The purple line, less steady. Alright? The green line, very steady. The blue line is the deep blue has a dip and then went up in July, big dip, went up, and after that it's not so bad. The light blue is quite alright, except last year at the end of the year, they have been going up a little bit. The light blue is about 2011-12, this one, last financial year, this is 12-13. Last financial year at the end, March, it was going up a little bit. In fact, all lines are going up a little bit. End of the year, look, end of the year, I told you that's a seasonal fluctuation. All lines showing an upward segment. You see that? All lines here showing an upward segment at the end of the year, except the red line. And the red line had a tremendous peak, which is called a spike. And that spike lasted about 2-3 months. And that's the time when the recession hit. What could it be? The number of factors could be there. Why the call market responded and they were having less liquidity. One, there was a withdrawal of liquidity from the system. Why would the withdrawal of liquidity take place? RBI didn't do much.
People thought that they would be used like what's the inflation, and therefore they started buying some more solid assets like gold and other things.
Maybe they were moving, shifting between assets. Another thing could be the portfolio investment is an important source of liquidity in the Indian system. NRI funds coming into the stock market. So when the stock markets are hit, quite possible people are shifting out from stocks to other things, both Indian and foreigners. Alright, foreign investment as well as Indian investment. That can drain a lot of liquidity. Alright? Okay? So whatever be the reason, it's very significant in this diagram that this is red spike is not a seasonal spike. Seasonal fluctuations are systematic and repeated. If you have end of the March, seasonal fluctuations is understandable. At the end of the financial year, you're trying to clear your books, you're making all sorts of debt payments, including taxes like we do. We clear our taxes, and rest of the economy does. Okay? So there is too much of withdrawal, and therefore banks have to, in order to show their CRR, they may have to borrow somewhere. So those small things, if you find systematic month-wise variation across years, that's seasonal fluctuation. But 1 year it's going up is never a seasonal factor. It's some other shock. It's not a seasonal temporary disturbance. And most interestingly enough, the red line belongs to 2008-9. And the months you see, July, August, September. Now, August, September, October. In November it's down again. And in fact, after that it fell tremendously. So, here you go.
Just on the period of when Lehman Brothers, the US banks were investing in India suddenly wanted to take back all their money.
Exactly. Many things could have happened. And the call market, if you're insulated from the rest of the world, and you don't know what's happening, you're sitting in a room and watching the market, everything is fine. Suddenly, you wake up, my goodness, something is going on. Yeah, like an earthquake, that seismograph or whatever it is called. So the instrument, I forgot the name. Huh? The instrument, name of the instrument. It records continuously vibrations on the Earth's surface, under the Earth's surface. Alright? So how do they predict? One is the question of predicting, and then another is, in the middle of an earthquake, it will definitely show the vibrations. One of the things they do, when they watch those lines, there is some people say, some scientists have heard on TV, that this kind of a variation 2-3 months back or 2-3 weeks before the earthquake is often an indication of an coming earthquake, forthcoming earthquake, which is going to happen in future. And another variation which is, of course, recording the actual magnitude of the earthquake when the earthquake is taking place. So this is just like that kind of a line. And I've seen on that paper where it records it, it shows immense vibration. Goes up, there are spikes when the earthquake is taking place. And from there, they measure the magnitude of the earthquake. Civil engineers know this stuff quite well. The civil engineers here who know this stuff. Who am I to talk about? I'm talking about in a general sense. I'm trying to compare things. So this diagram to me is interesting from that point of view. That these three very significant months we know, August, September, October in 2008, if you open any channel, TV channel, particularly Western channels, they're only talking about one thing. They're shocked. Things were really getting bad very quickly. All right. Next. Bond rate, month-end average. Why do I have it here? Oh, one was the month-end high. I was using two kinds of averages, and one is the month-end average. Month-end average is the same, except there is a plateau like a thing. Alright, one is month-end high, one value, and an average value is the low and the above. So what I'm trying to tell you, even if you take the low value and the high value and construct an average, alright, they were all showing, the red line is definitely showing a pattern which is very different from any other line there, except the blue line, the deep blue line, which has a downward swing in 1 month. Otherwise, you note these lines, they are above 1, so on an average the bond rates were higher. So you can conclude the liquidity on an average throughout the year was less compared to the liquidity in the previous year. You can make general statements like that. But that blue, deep blue has a dip, alright, the same thing, and the red, which are the months? Yes, it has going up around that time. It's going up from July end, August, September and October, except September and October it was a small change, a plateau, and then it dipped, amazingly dipped. Sharp fall like a cliff. It goes up and drops. So it's over. Liquidity shortage is over within 3 months. 3 months, they fell. No more liquidity shortage. It dipped means what? It dipped below, except the green line. It went on going down compared to any other year. That means the economy, when it goes into recession, it's the other thing. There is no more shortage. People दुकान खोल के बैठे हैं, कोई खरीदार नहीं है. That kind of a thing. कितना liquidity है, कोई आ नहीं, companies borrow नहीं कर रहे, fresh investment slow down हो गया, deposits are lying in banks, people are not spending, scared to spend. You understand what I'm saying? So banks are flush with funds. The buoyancy in economic activity has gone down. People are like gone into hibernation, not doing much. Okay? This is very clear. So this is the two data, and I wanted to check, actually this is for myself, I wanted to check whether these two averages differ or not. They don't. If you consider the low value and construct an average, the data is not significantly different compared to just the month-end high, which I used to do earlier. all 5 years, 6 years I've taught this course here. I used to take the month and average only. This year I thought, let me check out. I'm not considering the low value, so let me check the low value and find out. Achha. Now, this is an unfortunate story I have here. I have data here up to 2009. Now what is this data? I'm not getting any data. RBI is not supplying it at all. I wanted to know who purchases commercial paper. Who issues commercial paper? Not purchases. Which kind of companies are issuing commercial paper in India? It's a new market. Initially it was very depressed for many years. I'll show that to you. And it didn't pick up at all. Companies looking for short-term funds. They're trying to sell commercial paper because of all sorts of RBI guidelines and restrictions. Companies were having trouble. One thing I told you, if the credit rating certificate is more than 3 months old, RBI used to tell the companies, go and get it again. Right? It's costly. It takes time to buy those financial health related certificates or the general certificates of the health of a company. How is it doing? How the sales are, inventories are, the financial issues are. Have you ever seen a balance sheet or a profit and loss account of a company? You may like to open that. You won't believe me, so many variables are there. Like if you want to check the health of a person, if you go for a comprehensive medical blood test, I've done that. The doctor keeps on writing, ये करो, वो करो, उसके बाद जब report आते हैं, it's about 3 page long. This number is this, that number. You haven't heard of these tests, but you want a comprehensive test report. It's just like that. A company has so many variables which are significant, and industry economics people or management people do deal with them. So there are two accounts which deliver or supply those information. One is a profit and loss account, the other one is the balance sheet. Now anyway, so what you find here, what is significant here? Significance of this table only up to 2009, I have 4 years, 6, 7, 8, 9. End of the year, you see one thing, that the leasing and finance companies have the largest amount of sale of commercial paper. Which are leasing and finance companies? They are not producing companies. They lease or finance. Suppose when you are producing a good, you require a machine. The machine is available, the good quality of that machine is available abroad. Now for your company, given your total volume of sales, that machine is important maybe, but the total volume of sales and the cost of the machine is disproportionate. Now how do you manage therefore your production? You get it on lease from somebody. You rent it. The way I can rent, say, a TV, I can even rent furniture, I can rent, abroad it happens often, rent TV, rent furniture, I don't know, probably they can rent clothes also. They can rent a whole lot of things. Rent cars. Yeah, Western people are very funny. They can rent clothes also. There are second-hand clothes shops. Once, one family I met when I was doing my PhD. And he said, come with me, why do you spend so much? We were very close to it. Why do you spend so much on clothes? Those are very expensive. Say ordinary jeans, say $50. My goodness. And these fellows are so crazy. They earn in dollar there. As soon as you tell them a price in dollar, they would say, take it. As if they have a mental calculator. So in Indian currency, it's 550 rupees. I'm talking about 30 years back. My goodness. Who would spend 550 rupees on something? So they used to convert that back through the exchange rate into Indian currency. So I'm just joking here. So what they used to do, partly joking, not the entire, partly true. So what I'm trying to say, leasing and finance companies are an essential ingredient of any economy. Because equipment. IDPI does that a lot. I told you about IDPI. Okay. Now, since they cannot purchase it, it's so costly, they get it on rent. Now, these companies and finance companies are the same thing. They finance various things. They can finance personal items. I want to buy a car. There can be car financing company, automobile finance. I want to buy my household goods. They can be a financing company who will buy all the things for me, and then I have to make an EMI payment to the company, equal monthly installment. Just like a bank. But banks only don't do that. Non-banks do that. These are non-banks. Leasing and finance companies. Okay. Now you see the second most important set of group of companies selling CPs in India till 2009 are manufacturing companies. It's very interesting. Manufacturing. Third, you have financial institutions. These are big non-banks selling CPs, big ones. I don't know who are they. I don't have any detailed information, I tell you. And I've been looking and looking. I spent one evening, 2 hours on the internet and RBI site looking for this data table to be extendedly correct here. I didn't get anything. So if you find anything, it's all right. You are most welcome, and I would appreciate that. You will supply that information to me. All right. Now let's look at the commercial paper market. A little bit of time left today. Let's look at it. Now, can you believe the difference in the CD and CP market? Look, CD has been there before CP. So there's a little bit of blue line in the beginning. Alright? From the late 80s, CD has been there. CP market and also CD market were literally non-existent even in the new millennium till about 2004-05. Suddenly after 2004-05, I don't know what happened. This requires a research. You see, the CD market just took off. भगवान जाने जो नींद में इतने देर तक थे, कैसे उतना खड़ा हो गया? Like you're walking on a plain land, suddenly there's a bound. एकदम सीधा ऊपर चले गए, देखो, blue line, a CP धीरे धीरे आ रहा है, it's like a snail, धीरे धीरे आ रहा है. CD एकदम हाइपर है, ऊपर चले गए blue line. कैसे खड़ा उसका slope देखिए. Slope is, I'm not saying it's 90 degrees, but slope is very high. Alright? It's dramatic. It's called dramatic change in the market. But CP market is somewhat stable. I mean, it has been improving steadily. Alright, a 30-degree angle or whatever it is. But that fellow there is unbelievable. Over 60-degree angle. It just shot up, CD market. And who sells CD? Banks. And some non-banks. Now, banks and non-banks are doing very good business in India, but still they are selling CD to borrow money. I really cannot explain all this. And 2005-08 has gone up, and last year there is a little bit of plateau which has gone there. Anyway, that's the total amount in the volume. It's called the volume of CD and CP. Alright. Next. CP rates, I'm coming to CP rates and minimum base rate. What is the minimum base rate? Minimum base rate is, earlier it used to be known as benchmark prime lending rate. RBI has changed the term. Benchmark prime lending rate. RBI has changed the term last 2 years or so to minimum base rate. That is the rate below which you should not charge on your loans, it tells the bank. When you're giving out loans, the minimum rate you have to charge is this. You can go above it. The minimum base rate. Or it used to be known as, earlier texts and documents used to tell me they were known as benchmark prime lending rate. Benchmark B prime lending rate, BPLR. It's known as BPLR. If you open RBI documents or government documents, you will see this abbreviation often. with respect to money market. This is RBI guideline. They have deregulated interest rates, but it has a guideline. It's been active for a long time. They used to have both a low and a high value set for the banks. Alright? In some years, earlier days, they used to have a fixed value also. Alright. Now, this is the minimum base rate is something. Now, the minimum base rate is if you are taking a loan, suppose you are a company. Why do I have the green line here? It has a reason why I have it here. I have it here because suppose you are a company and you want some short-term cash. You will go to a bank and the bank provides you with the working capital. Now the working capital interest rate cannot be less than this. So if you go to the bank and ask for cash, this is the interest rate that you will have to pay. The question is, the company, if it has CP market open, it can go to the CP market and withdraw cash. But it will be profitable for a company to go to the CP market, provided the CP rate at some stage somewhere is less or at least equal to the benchmark prime rate. Otherwise, why take the hassle of go through the formalities, the credit ratings, float CPs, announce them? That also has costs, fixed costs. And then you sell the CP, and then the CP matures 6 months later, 8 months later, you pay the interest rate, which is a market determined interest rate. The reason is that's a substitute for your working capital that you get from the bank. So what I have here is the minimum benchmark prime prime lending rate, or which is known as minimum base rate here. And what you see here is very interesting, except a few years. No, in most years, what you see here is that the high has crossed that. The low has not crossed that except in 94, 95, right in the beginning. Right in the beginning, the red and the blue line. What is the blue line? Blue line is the low CP in a particular year-end value I've taken. High is the high CP value, year-end value. And what you see here is that the blue and the red in 94, 95 crossed the green line. So for some reason there was too much pressure on the CP market. And the green line was also quite high, meaning the RBI instructions for the interest rates were also very good. So companies were trying out CP market. The CP market didn't develop much those days, I told you. Alright? So not much of funds were available in the CP market. Investors didn't know about CP. And the interest rates, given the demand, the supply was less, so the interest rates were high, the prices were high. Both the low and the high crossed. Other than what you see here, that the companies go to the CP market to borrow, although the red line has crossed the green line, which is the high value of CP in some years, it has crossed. But generally, the red line is either nearly equal to the green line or less than that, and the blue line is definitely less than that. So there is an advantage when the CP rate is down to go to the CP market and borrow short-term funds for companies instead of going to the banks and paying an interest rate which is usually higher than what you are getting at the CP market. The reason why I have the three lines is that the RBI's guideline to the commercial banks as to what the minimum base rate is, and also the high and the low CP values. Is it alright? Now what do you see in the current years after 2003, 4 and 4, 5, they have been going up and down, up and down. Now last year what it has been doing, last 2 years, 10, 11 and 11, 12, they are all going up. Last 2 years, 10, 11, which is not written there, and 11, 12, they're all going up. Meaning what? The liquidity in the CP market is somewhat less relative terms compared to the demand, company CP demand. Alright? They have. Whereas RBI guidelines have been minimum benchmark lending rate to come down. It has come down. Look, the green line is coming down. RBI guideline with respect to the green line, it's coming down. You can see dipping. RBI is trying to relax some monetary instruments. These are all monetary instruments. It influences the market. Relax. Why? Because the real economy in India is in a recession. And RBI is trying to compensate for the tight monetary policy by lowering the minimum rate at which banks can give out loans. As to lower rate, banks are free. Otherwise, they are like a restriction. Father has given me the restriction. The earliest you can go out and play will be in summer months, 6 o'clock. Now I have to wait till 6 and I will go out to 6. So I miss out on some fun. But now the restriction is relaxed to 5 o'clock. So I go out and play early and I see more friends there. So this is minimum rate restriction, minimum level that at which the banks have to give out loans is coming down. Reason is to give a boost to the real economy. Green line dipping is very significant, and the significance of the relationship between the green and the red on one hand and the green line is the two important issues to be noted. Alright, in the CPD. Clear?